the market has been moving in a series of lower low, lower high, and we have our lower low, lower high, lower low, lower high, and lower low, lower high, lower low. Now you have a break of structure, right? Now you're looking for a retest here, right? Now the market has retested this particular zone. Now you take a long position on this zone here, and our TPs, take an entry and TPs 60 pips from our initial entry. There's 1:3 risk to reward. Now let's say this market decides to move about 10 pips from your initial entry, and now you're super excited. You decide to what? Because you're checking your profit and your losses. Now you're running in profit already. You don't want to lose this money you've already made. You decide to what? Break even on your trade, right? Now this market decides to what? To retest this particular position again, stopping you out of the entry. Now you're out of this trade already. Now you have something like this, and this, and we have something like this. Good. So you have something like this, but remember you're already out of this trade. Now you're already out of the trade. Now this was your initial entry, but because you were over managing your trade, you're already out of the trade, and now you decide to what? To jump into the trade again. Decide to FOMO into this trade. Now you're risking another 20 pip on this trade. Now this market decides to what? To retest this particular zone now. Market decides to hit this particular zone now. Now you have another stop out. Remember, now you have a minus 20. You've already lost this 20. This your particular entry, right? You see something like this, and like this, and something like this, and this again, right? Now you draw your trend line from here, okay? Okay, now remember this was your initial position, right? And now up till now you're out of this trade. Okay, good. Now this decided to come down a bit to this place, and we have our breakouts and another retest here, right? What do you do? Decide to take another long position here, and you're risking what? 20 pips, and now going for your 60 pip. Remember, when you took this trade here, your analysis showed you that this market might has the chance of going for a what? A 60 pips. So this was supposed to be your entry according to your strategy. This was supposed to be your take profit here, this particular zone here. So let's mark out that zone. But now you're jumping into this trade here again, and now you're risking 20 pips on this entry. Now the market decides to go in your direction again. Good. But this time, and we have something like this, and something like this, something like this. Okay. And this time around, you decide to what? To break even on this trade. Now the market has hit your TP, but because you entered this trade here and you want to go for a 1:3, this market has already gotten to this resistance here, because definitely there was something you saw before you put your TP here, right? This market has gotten to this resistance here, and now the market failed to move, stopping you out again. And now you have another what? Another loss. Here you hit another loss. Okay. Why? Just because you were checking your profit and losses. If you had all these trades from this particular position, that's your initial entry here. This initial entry. If you had held this initial entry, by now you should be on your 60, should be out of your trade. But because you were over managing your trade, you've lost all the money you were supposed to make in your trades. Now here was what happened. You took your first entry here, right? And we took another entry here. That's 2 and another entry here. 3 entries. That's over trading already. Now, when this market goes to your TP here, right? You were focused on what? More profit. That's greed. Just because you were focused on the monetary aspect of your trading, you lost money. You lost 20 pips here. Remember, you lost 20 pips on this particular place here. And this one was a break even. Here was minus 20. And this one, you lost the profit you already made. Remember, you also jumped into this trade at this particular zone. You jumped into the because you don't want to lose the setup. You jumped into this trade at this zone here. So that is FOMO. So just with this little example I gave you now, you've seen how emotion affects most of your trades, right? Now, just with this, we have FOMO, we have greed, we have over trading. These are things traders usually do always, and in fact, most people are profitable, but just because of these things, you keep losing money, to the market. Now, here's a quick hack to reduce most of the emotions you go through in your trading daily. So, if you gained value from this video, make sure you implement this in your trading. Don't just watch and leave it like that. It changed my trading drastically. And don't forget to like the video. That's the least you can do. And subscribe as well if you want to see future content like this. Bye for now. See you next time. Cheers, guys.